Good morning, everyone. Welcome to another episode, another class during the London session on TopstepTV. My name is Deeyana Angelo, aka Market Stalker D. I'm a Series 3 qualified trader specializing in some of the more alternative products such as gasoline futures, crude oil, precious metals, etc. Right, let's have a look at what we have this morning. So, I am stalking RBOB and GC this morning. So we're gonna see which one gives us a better setup. Let's just get these domes a little bit smaller so we can make the charts bigger. As always, starting on super large time frames. So let's see what gold is doing. It made a new all-time high, right? So that is step one, that we are in, a pretty fierce uptrend here. Now, intraday, I can see that we are opening with a little bit of a gap. So we did open above value, touched value high, and then went a little bit higher. So we're going to analyze that. That actually looks quite interesting to me. So let's just clean up the chart, start all over again. This is something I like doing every day, believe it or not. Full screen. Yes, here we go. Okay, we've got the full screen, we've got audio, we've got video, we've got everything. So, daily chart. For now, it's a bit of a consolidation on the daily chart. So we made an all-time high, no commitment yet over the last day or so to take it away either higher or lower. So it's, it's a bit of a line in the sand here. What is the visible profile doing? I don't know why that's not on the chart. Let's put the visible range profile, volume profile. So it's building volume here. Definitely building volume. The candle that made this high, it's what you would call a long-legged doji, which means it basically has wicks either side, but the body of the candle is actually pretty small. It means that they opened the day, they wagged around a lot intraday, and then they didn't really commit to any particular direction. That could mean indecision, which is not odd because we do have the NFP towards the end of the week. We've had some headline risk over tariffs and stuff. So all of that could mean some indecision in general in the markets. So apart from that, apart from, some sideways movement on a very large time frame, that's the only thing I can discern here. Right. Next, we're going to do the 4-hour chart. I'm just going to cough. Right. 4-hour chart during Asia didn't do all that much. It kind of came off that high. So it's been sort of going lower ever since the 9 a.m. Central yesterday. And so far we're also below overnight Globex VWAP. What is the composition of these candles here? It's kind of creating something called a drop base drop. Now, when we make an all-time high, I would rather use this 2849.8, let's say 2850 area for any intraday targets. So I wouldn't necessarily trade right at 2850 because you have this 4-hour supply here, so it's a drop. Now, one thing that the sessions like to do in between themselves is to have one session going one way, then the next session kicks off and it goes back the other way. And then COMEX kicks in, then that takes it yet another way typically after the initial balance. And that's like a cycle that we see on most days. Now, some days are going to be single direction, but if we look at a large sample size, let's say we look at 3 years worth, how did the moves happen every day? Those sorts of single direction moves that just go in one direction, doesn't look back, no significant pullbacks, keeps going higher, keeps going higher. That is actually something that only happens about 8% of the time. Now, some of the more limited trend days where you have a trend, but then it stops, then it pulls back quite a bit, then it goes back up. Those sorts of days are around 42% on gold. Okay, so those are some stats that we need to be aware of whenever you're grappling with a product. So whoever is like jumping all over the place and, you're trading one thing, then another thing, and you can't quite figure it out, maybe look at some stats on behaviors for the particular product that you're trading. We want to know the characteristics, the personality of whatever we're trading, and think of each product as its own person. You want to get friendly with it. You want to find out how it breathes, how it moves, what makes it tick, right? And if you don't know that, you shouldn't be trading it in any accounts that matter. You should still be in that observation phase, strategy development, your own development, and all of that good stuff. Let's drop down to a 30-minute chart now for some intraday levels. So the London value high, so from yesterday, is 28.39.5. I'm going to move the existing line that I saw somewhere down here. There it is. Let's do the coordinates. It's easier. And that is London value high. Now, once COMEX kicks in, we have an entirely new set of values that are not going to have anything to do with this. So this is just London specific, okay? London specific. Now, value low is 28.26 roughly. It's actually 28.9, but sorry, 28.25.9. But yeah, it's good enough. Do I have another line? I do, but it's a little bit mismarked. Coordinates. So this is London value low. Where is the initial balance? From this candle. So I'm going to put that. I'm going to widen this because otherwise we don't see exactly where wicks are. Now, on some of my other platforms, I have the ability to make this into kind of like chart on foreground, and then whatever objects you have, it will still put the wicks in the forefront. But I don't know whether I can do this on Topstep. So as you can see, we're still inside the initial balance. So for my rules, for my style of trading, this means no go yet. Because why? The outside of value moves have not happened yet. Now, what is the significance of extending the initial balance? It means that the other time frame participants are stepping into the market. Now, if you were here for Jim Dalton's class, he does say that initial balance these days is not nearly as relevant, but I've got to say every time I try to trade during the initial balance, it doesn't go that well. All of my edge, and one of the main reasons why I start these London session streams about 90 minutes into it to basically give the time for the price action to pop outside of that initial balance when all of my setups start happening. And right now we seem to be in a bit of a quieter day, right? So we are already, in the D period TPO, and we still haven't really done much. So that means we need to wait. There's no movement here. One thing that I can see is that we tested the London value high and we went away from it. So, gun to the head, I would say longs are still in play. But for now, I still don't have the other time frame participants that increase volume. You know how Dalton was saying, oh, there are no adults in the room. So this is what I'm seeing here as well. There is no massive volumes happening. It's, in fact, falling in volume. So if anything, this is now a range, right? We have a range. Until they decide what to do with the initial balance, Globex VWAP, I don't really have a good setup, right? So I need to sit on my hands and be very patient. In the meantime, let's have a look at RBOB because that fell overnight. I think this was the tariffs. I went to bed pretty early yesterday, fed the dogs and just crashed out. So I was already in bed by like 9:30 p.m. I know. So I can see that after the Trump and Trudeau conversation, it all just fell like a brick. And then that was it. So that happened for about half an hour, probably very quick if I were to guess. Let's look at 3-minute chart to see how quick that drop was. I mean, yeah, look at this. This is the, it kind of sold off from settlement, then picked up a bit of speed, and then whoosh. So it basically just happened all within like 1 or 2 minutes. That if you weren't in on that already, that would have been very difficult to catch. And it's one of those things where whenever Trump is speaking, from memory from last time when he was president, we had his tweets, right? That were just causing so much trouble. Let's do the same thing to RBOB as we did on gold, so that larger time frame analysis. This is the weekly chart. What do we see on the weekly chart? Not much, right? We are sort of in the middle of the previous swing. This is the high, this is the low, kind of in the middle. We had a localized supply on the weekly chart that got broken. This is why some people are like, oh, we're in an uptrend now. I actually had a swing that finished yesterday with that pop higher on crude oil. Right now in that account, I'm totally flat. So I don't have a setup there anymore. So indication of a supply being formed though on the weekly chart. It's interesting. Are we going to have another range or are we finally going to start moving? This is RBOB, right? I might have a little look at crude oil just to see what crude oil is doing. Gonna get rid of that. Lots of lines, so let's clean up the chart and start again with fresh eyes. This is also something I do all the time. So crude oil to me is probably more decisive, if anything, than RBOB. So definitely coming off that pop that caused us to think that everything is trending up. And now, is this now a swing down? Maybe. And where could this be going? Where is the bottom of the swing? Well, we had this speed bump, speed bump demand, which is why I ran the swings around here. But really, we have some demands all the way down around 68.60, roughly. And then another one all the way down at 65.60. So we'll see how the intraday players wanted to take this, right? Crude oil has been pretty active throughout both of the sessions, and we did have OVX yesterday that climbed. What is OVX? It's the volatility. You know how you have VIX for equities? Well, OVX is the volatility index for crude oil. It actually climbed over 35. Now, I've been kind of fighting with crude oil all last year because it was in a $1 intraday range, which is absolutely terrible. I want it to be over 35 OVX, which then brings days of over 200 ticks. That is exactly what we saw yesterday. The entire day's movement was about 250 ticks, a lot more sane for crude oil. So that could be something to maybe focus in on. However, I'm trading RBOB quite a bit, and I'm happy with RBOB, which is like a twin. Gasoline futures are like a twin of crude oil. I like to call them the NASDAQ of energies because it can move quite a lot. But yeah, so it's a similar picture with crude oil possibly being weaker to me. I will get to the questions. I'm just doing my analysis because I want to do some trading. And, you know, analysis comes first, then we're going to answer questions. For anyone who is in the VIP group, I do have a general meeting with all of the coaches today. So I'm new to the whole Discord and VIP. Like, I don't really enjoy Discord much. But obviously everything is run through Discord. So I know they have like a couple of rooms where they run the sessions. And I'm not entirely sure how the scheduling works. So this is what we're going to be talking today. Once I know that, I will notify everybody in my VIP group when I'm going to set up the first session for us. Even though we have been chatting a lot in the VIP group already, I've given a couple of threads. I've pinned a message as well, so if you're in there, you can check all of those out. But yeah, crude oil to me weaker than RBOB, and it's actually touching its own VWAP now, whereas RBOB is going over its VWAP. So we'll see which one is going to win out. But usually it's crude oil as the bigger contract that effectively drives the moves, even though RBOB looks like it's the stronger of the two. But if crude oil cannot go confidently above its own VWAP, then that will not be a long. Rather, it will be some kind of a failed auction short on RBOB, and we're gonna have to wait and see. But for all intents and purposes, crude oil is still inside its own initial balance, whereas RBOB is popping outside of it, which you can see over here. Obviously, both are heavily below its own respective values, which are not coming into existence now. But yeah, this is RBOB. Here's the initial balance. Already popped out. And then if you look at crude oil, this is its own initial balance, still inside it, right? So that's a bit of a difference in strength. All right, let's tackle some questions now that that's done. I have a basic understanding. This is what I look for. I look for understanding first before I start clicking buttons. And then depending on the development of microstructures, I will make my decisions on what I'm going to do with it. But generally, I can see someone is asking, how long are your trades on average? It really depends on the day, but if you take all of my trades that I've run on platinum and copper and, you know, tiny scalps that I've done on RBOB, which are not that tiny because they're between 35 and 60 ticks, but I consider them small because they don't last that long. On average, though, I would say my trade duration is about 45 minutes. But, you know, that's taking all of it into consideration. Sometimes I hold trades for 3 to 4 hours. Other times I will hold them for like 3-4 minutes. But never will I do like a 3-second trade, you know. That's not the kind of setups I look for. So usually my trade setups have juice in them and they have reasonably decent trade locations. They can last you a bit longer. So I would consider a scalp not by trade duration, because some of my scalps have lasted 10, 15, 20 minutes, but they are effectively scalps because they never go to you know, doubles or singles even. Sometimes they're like catching 15, 20 ticks and I'm using a 35 tick stop. Or on other times I might be, you know, aiming for a 1-to-1. So it, you know, it will depend. But overall, my median average for the trade duration is 45 minutes. So I don't know how that helps you because everybody's a different trader. And in fact, one of the reasons why I named my VIP group Chameleonaires is because I'm a bit of a chameleon in the way I trade. I can do a swing trade intraday. I can do a little bit of scalping, even though I don't like it. But if you have a neutral day, what are you going to do? Like if you have a range-bound day, well, you're going to fish for big moves, mean reversions, because that ain't happening. So you have to modify your strategy to whatever we have in the day. And sometimes even different parts of the day. You know, if I want to, for example, I can't trade earlier in the day for whatever reason, and now I'm looking at the lunch hour time. Am I going to be looking for mean reversions during lunchtime? No, because that's, you know, everybody's away. So you get a range-bound movement. Therefore, you need to pipe down, wait for, you know, tops and bottoms, snipe whatever comes. And that, like crude oil actually did that yesterday. So if we go on a 30-minute chart yesterday, so we moved for the first part of the day. I actually traded RBOB during London, so I finished my day pretty early yesterday. I wasn't up massively. I was up 447 by the end of London, and yeah, I just decided to lock it up because I was like, well, you know, it's a bit of a crazy day. Do I really want to give things back? Probably not. So that was good enough for me. And yeah, so I was mainly trading this sort of price action. And then as soon as we got to NYMEX, I don't trade the first hour in NYMEX or basically any exchange. They went a little bit crazy. And this looks like, oh, wow, this is a great opportunity. But look at this wick. Okay, if you like really analyze whether you could have been on this. You know, this is a wick of about 30 ticks, and this entire candle spans almost 100 ticks. So unless you're like very good at catching momentum trades from somewhere higher up, this would have been very difficult, because if you went to see what NYMEX is doing, so you wait for the first half hour, and then you try to go in on a break, what's going to happen? You're going to get smacked on the face trying to go with a breakout, right? And then, you know, that kind of kept happening, and then it kind of settled into this. So what time was that? Oh, look, that was Euro close. Now, one of my setups is to fade the day's moves into the Euro close. Now, most times this would be more of a scalp type trade. It's not going to be, you know, some big reversal, but it can be. You know, it depends where we got to and what sort of levels we are hitting and whether we can actually get in on the move. You know, sometimes it runs away from you, and then what? You chase? No, you stay out. But just as it happened, it settled in a range, and it actually offered quite a few opportunities if you were a range trader during lunch hour. Then it finally broke out. I was actually chatting to Coach Hoop about what was going on here, and I did do a YOLO trade on one of my other accounts. But yeah, this was crude oil. However, RBOB had a much bigger movement, but I was using that consolidation as my guide to say, okay, now we're going to do a rally into settlement. And look at the difference. So this is the same time frame. So here's Euro close, 4:30 p.m. my time. This definitely has a reversal and a continuation. So this wasn't necessarily any kind of a range, even though crude oil was ranging, right? But to me, this was after 6 p.m., which is kind of like towards the last 90 minutes of trading. To me, this was an opportunity to run a rally, continuation rally into settlement. So I got that. Grabbed about 80 ticks out of that, but again, it wasn't on my Topstep account, so, who cares, right? And then that was the stopping point. This was settlement, 7:30 p.m. my time, and settlement NYMEX happens 90 minutes before the electronic closing, so after that, you can trade it, but on most days, it's going to be very quiet. And yeah, so then it just kind of faded, and this was the Trump and Trudeau outcome, I think, of their conversation or something. But I was asleep by then. So yeah, that's kind of the gist of what I'm seeing and how I'm looking at things. I don't really like super crazy markets. I like medium crazy markets. So the volatility has to be decent, but at the same time, I don't like psychotic products that are wagging like there's no rhyme or reason to it. And like NQ, this is why I don't like NQ, because it wags through a level. Like the only way to trade NQ is like super scalps. It's like you notice a change in direction at a level, go in and pray. Like, and then you're either right or you're wrong, and there's like no middle ground. Whereas I like to control my decisions and my positions a little bit slower, and I don't like to leave things to chance. So I want the level to be hit. I want the right conditions to be in there. I want to get in on the move, and then I want to manage it if necessary, because sometimes you don't need to manage anything. If necessary, as the trade develops, whichever way it can develop against you as well, that happens. But it's just NASDAQ doesn't allow you the time to react. So unless you're using super wide stops, which again, I'm not a huge fan of. If I was to translate the same formula into NQ, like I use in RBOB and gold and all the other products, I would have to use a stop of about 140 to 160 ticks. Like, I don't want to do that. Because if I traded one NQ, we're talking like 800 to $1,000 for a stop loss. So what sort of account can absorb easily 1 to 2K of loss? For me, it would be an account that is probably in the high six figures, closer to like 1 million. Why? Because you want to trade more. You're not going to do one NQ trade and chill, right? You're planning to do several of those. So you would trade one NQ, maybe you have $1 million account, and you designate that, for example, $5,000 is going to be your daily loss limit, right? And what does that mean? Well, you're effectively doing 1 to 5 trades on certain products. That's kind of what I look for. And on large accounts, like my actual risk per trade, I try to keep it to like 0.3%. So very, very low risk. On some of the prop accounts, I do go harder because obviously they're all small accounts to begin with. But at the same time, my prop accounts are not there. They're just there for like, running income. I don't really consider them any kind of wealth generation at this point. But it can be, if you approach it well and you make this your mission, your destiny. Then you can use this to, elevate your status in the world as well. So, that's initially how I did it with the old style prop firms, right? I had like a 6-figure account at the time. I wanted more, couldn't see a good way without a prop firm giving me more buying power. So I went to a prop firm. That's how it happened. Let's have a look at some more questions. Vital says, hi Dee, can you please describe the indicators on your charts and what they're showing? Okay, so first thing to note is that I use Topstep X as my execution platform. So these are not all the indicators that I use. The indicators that I use as like for my charting properly look like this, right? This is the chart that I use. This is a normal TPO profile that is also displayed as a graphical inlay. I have the value areas displayed. I can very easily change sessions. I can very easily go into backtest mode as well. So, I have all of these like nifty features that we've created over the years for my needs, and then other people found them, and now Blatik has got like thousands of users, which is great to see. And we did do some fairly innovative things that other people have since copied. But hey, you know, imitation, greatest form of flattery, right? It is what it is. But yeah, so those are the indicators that I use as my kind of core decision-making process. And these are just add-ons. Like I've got some volume on here. I've got the DMI indicator. This lower one is nothing more than the ATR, which measures a different thing to my ADR and ASR levels. So while my ASR and ADR levels measure the market movements and actual points on the chart that could be exhaustions, the ATR just simply measures the previous 14 candles and spews out the number that will be appropriate for these particular movements on the day. So I kind of match both of those up. So if something goes super crazy and my initial formula that I have calculated for my stops, which is a volatility adjustment thing for stops, if that is markedly different on the ATR over the last 14 candles, it means that we have an outlier day. So all of it is kind of data-based. Well, not kind of, it is data-based. I'm a very data-based trader. Everything on my chart serves a certain purpose. And then obviously I drag out some additional levels from the options chain and also from my other charts, just so that I can visualize it better for you here. On the right, you can also see the visible range volume profile. Now, I usually use that on a very, very low time frame. So here I can use it on a 100 tick chart. You can use range charts for that as well. So anything that will give you a sense of movement, right? And what do I mean by that? Sense of movement is micro market structures where we can sift out some better ways to time your entries. So I might have a setup like, let's say I'm looking at a sustained auction in RBOB because that just popped. Well, I'm not going to be chasing this, right? I'm not going to be chasing this. I'm not going to go, oh my God, it's gone without me. I don't care, right? Because I know that there is ebb and flow on any swing, right? You can have micro swings that will always have some sort of a pullback. And I do have something called the Q points, which I do sometimes use on a 2-minute chart. I mentioned them yesterday. I'm not going to go into what they are because this is too short of a session to explain that. But there's multiple uses for them on low time frames, high time frames, very low time frames, looking at microstructures, and then just matching all of that up to figure out where a pullback might happen. Now, sometimes that's a matter of measured moves as well. So if, for example, we've had a swing like that on RBOB, and you're going, how far could this go? Where do I go? And then you go, well, from the breakout, you can basically just plot this. And then the measured move based on the previous move would be up there. That would be the extension. You can also do it the other way. So how much do we pull back? I mean, in this case, it's going to be very similar because it was the same move. And then it's like, well, how much higher can this possibly go? Or if you want to go into a pullback, well, where would this go? Well, you can kind of identify the high and then see how much a pullback would be worth. It's like measured moves, right? Very, very simple. At this point, my eye sort of catches that on its own. So, for example, if I know that we moved away from the initial balance quite a bit, I might catch one of these pullbacks and go, well, ballpark, if this pullback was this big, ballpark, we should get back down to the initial balance. Now, this extension is still not large enough to call that. But yeah, you can effectively use that. It's like a very simple way to follow market structures. And then what else do you have? Higher highs, lower lows, higher lows. It's like, how bloody basic can we get here? But I don't teach that, guys, because you can find that for free on the internet. Like, my job is not to teach you free stuff that is like, oh, you can just Google it. I use some more elaborate techniques to actually come up with situational awareness. So are we seeing evidence of other time frame participants, what Dalton actually calls adults in the room? And that's how you recognize them, by volume and by extensions, and how sustained are those extensions. Now, sometimes you can have adults in the room that appear, then they disappear, and then you get range-bound markets again. But yeah, if you didn't catch Dalton, if you have no idea what I'm talking about, you're just like, what? Who's Dalton? What is that? And if you missed Mr. Jim Dalton coming to see us, then this is the link. They've clipped it, so you can watch that. Now, buyer beware, okay? Dalton is very wordy. He is, he's been doing this for, like, I don't know how many years. Like, if we can see the profile, the profile actually got popularized in 1986 when his first book came out, and that Peter Steinemeyer actually came up with it some years before. Well, we can say that, you know, I was born in 1980, so I'm pretty sure that Dalton has been using profile for as long as I've been alive, almost, right? So naturally, he is a complete legend of the world, and yes, he does sell courses, but, you know, this is not a charity, and profile can set you up for life. You know, it's such a powerful tool once you learn how to properly use it. Unfortunately, we see a lot of people using it the wrong way. So they make blanket statements like, oh, this doesn't work. Situational awareness, that's all that the profile is. It's a framework in which you can see the market developments through a bit more of a clearer lens. It's not going to tell you where to get in or out, but it is going to give you clues as to how to position yourself better, okay? So that's the link. That is the link. Going over my DMI settings, because I see somebody is asking me. So very simple. If I'm on a larger time frame, I will kind of stick to, let's say that I'm on a 2-minute time frame, I will stick to 10 and 21. But if I'm really looking for a shift in the market movement, that pump that I'm looking for, like for example, right now on the 100-tick chart, you can see this sort of moving, but to me that's actually too slow. So if I'm on a 100-tick chart, I want this to be even faster. So I will actually cut this down to 5 and 10. And then you can see those pumps and changes even more aggressively on a 100-tick chart. But remember, this is just a visual aid for you guys, okay? I can see this happening through candles. And volume. I don't really need this to visualize it. But I just think that for some other people, might be a bit more difficult for me to just kind of talk about candles and stuff and say, oh, we go to higher. And some people would be like, well, yes, we go to higher high, but what about this high? Well, that's not a relevant swing. Like, I don't care about that. You need to have a swing and then another impulse move in order to call something a low or a high. If it's just like this, there's no impulse there. It's literally just like heading downwards, and you can see that better in the DMI. And then when it starts to wag around, well, these things start to pop up, right? So you can see them a lot better on the microstructures. So that's why I keep the DMI on here. It's just another tool to visualize some of the movements a little bit more efficiently, if that makes sense. Let's go through more questions. Now, heads up, guys, I do have my more scans because my shoulder is still not completely, I don't know what's going on with it, but it really hurts still. So I actually have to have more scans today. And usually I will keep this going for about 90 minutes. But maybe I'll cut that a little bit shorter today because I do have to make it to the hospital on time. So I might, the hospital is not that far away, but I do need to drive there and find parking, which is always a nightmare in London. But yeah, so I may cut this maybe at 10:45 rather than 11. So just like a little bit earlier. So just keep that in mind, okay? Okay, so how do you use the VPVR? So that's the next question about my indicators. Now that's a loaded question. Why? Because the volume profile has multiple uses. First and foremost, I use it on large time frames to figure out whether the supply and demand areas that I'm looking for have enough volume. Now that tells me certain information. If there's a lot of volume, like for example right now, RBOB on the daily chart, where it's actually accumulating, right? It looks very different from crude oil. This looks stronger to me. So basically, if we're going to take the hypothesis that this is still accumulating, we want to see a pretty decent amount of volume here that will sort of act as a floor, right? They're like building structure around it. So that's one way to look at it. We also have the visible range point of control here. So we're right in the middle of the highest volume area. Now, TPO POC and volume POC, to me, are actually two very different measures. If you see the volume POC on a very large time frame right here, that can actually be a decent starting point for some swing moves. I don't want to get in exactly in on the POC, but if we start to build volume at an area and then we start getting the reversal from it, that's a very significant thing for me. So if I'm looking at a supply, I would also say that this supply here doesn't quite have enough volume. So once we reach there, well, actually, it's already happened. What am I talking about? So here, I was about to say these sort of thinner supplies generally bring really quick pops and then pivotal moves that run away from it very quickly. And I'm still like, this is really bright lights as well. So I didn't see that this already happened. So I put it on the chart and I'm like, oh, when we get up there, we were already up there. So basically this is the expectation that I get. Whips into it and shies away. It's like runs away. It's like, it robbed a bank. It is running back the other direction. So this is the kind of moves I would expect from a thinner volume supply. So I wouldn't expect price to hang there for days and, have margaritas like Coach Ray says and chill and, get some sunshine. It's literally just like hit and run. But if we had a supply area with a lot of volume in it, so we spent some time there, built up a lot of volume, then I would expect the price to get up there, spend some time, maybe a couple of days, so you get a range-bound opportunity to effectively just snipe it from up and down. You expect a bracketing market, which means overlapping values over a few days, and then a move away. So to me, volume profile is kind of like just an aid to ballpark, do like statistical analysis on, are we going to pop there quickly or are we going to spend time? And then I will modify my approach in the plan based on that. Now, once we drop down to very low time frames again, there's another use. We then pair that up with swings. We pair it up with the expected movement. It's a bit gappy, so let's go to a 100 tick chart here to avoid the gaps. And here the volume POC, to me, will be an indication of how good the movement is going. Similarly, if we start to build volume, and you get the POC appearing or moving up or down, that will tell me where they're building volume. And then if we cannot go above that area, that to me spells that if I'm long and we cannot break the newly formed POC, yes, it's moved up, but it's done nothing for the last sort of 5 minutes, it's time to exit. So it's kind of like an early exit technique for me. I do realize that for some newer traders, this is going to be way over your heads. Okay, I do realize that. You are seeing 18 years of me staring at this stuff day in, day out. This is like thousands and thousands of hours of me tweaking my system. getting comfortable with what I want to see. I'm someone who can take a lot of information in and retain a lot of information. I do have this like minor superpower of photographic memory, which kind of aids me in a lot of things. Mainly when I was in school, I was always an excellent student, not like a valedictorian or anything, but I was always an excellent student because I kind of cheated, because I can snapshot a page and just read off of it. And my mom actually caught me doing that learning German, because we had German in school. So I actually memorized all of the questions and answers as they were in the book. So my mom, speaking German, she's not German, but she lived there for quite a few years, she asked me a question in a different way. So I went, no, that's not right. I was like, 9 or something. And she goes, what do you mean? Answer the bloody question. Like, what's wrong with you? And I said, that's not the way to ask a question. You have to ask it, a very particular way. And she was like, no, I'm going to ask you a question however I want to ask you, and you need to answer me. And I was like, okay, well, in that case, I have no idea. I have no idea what you're asking. And she was like, and you got an A in German? So yeah, my mom was absolutely shocked at the fact that I literally snapshotted all of that and I managed to get an A. She was not very happy, let's put it that way. But I did that throughout most of the school, most of my school years. I would just memorize everything and then spew it out on the tests, making me look like I'm an excellent student. And in reality, if you ask me anything about actual practical application of the stuff they were teaching us, I would just be like, I have no idea. So yeah, that is one of the things that it's actually served me really well in trading, because what do we do here? Pattern matching. How do you do that? Remember the pattern, then recall it very quickly. That's actually something that comes very naturally to me, right? I realized through my work with coaching people and stuff that not everybody is like that. And again, came to me as a bit of a surprise. Another thing is that my husband doesn't have photographic memory, and he was like, what, how did you do that? Like there's things that are a bit freaky about me. And I would explain to him, I was like, well, what, you can't see like the room? You don't remember where things are and stuff? Like how do you find anything in life? And he was like, I don't know. I just, remember just generally where things were. And I'm like, but you don't have a picture in your head? I was just like so flabbergasted that not everybody has this. But as a result, pattern matching to me is pretty easy, right? Because of that. And, take it as you will. We're all different. Like, look, some people are excellent with like text stuff. Like people read something to you and you remember it. I can't remember anything like that, right? I need to see it. If I don't see it, it's in one ear, out the other. It's just how I am, right? So there are drawbacks, there are positives and drawbacks to having one sense or something developed that, different than other people, right? This is why, audiobooks don't work for me, guys. I've tried listening to them. Nothing retains, right? Nothing retains. I'm just like, what? I have no idea. I have to see things in front of me. And that's why trading for me is perfect, right? It's kind of like music. All of this looks like music notes to me. It's probably why I was a musician for so many years as well. All right, so VPVR, many uses, similar thing. So I went off on one there. But basically, it can show you thin volume areas. It can show you thicker volume areas. But beware that VPVR will move with the visible range. That's why it's called VP visible range. So whatever happens, whatever you have on your chart, if you have nothing on the chart, there will be no volume. If you have something like this, so it is quite discretionary. But if you, for example, want to just have a look at what happened with the initial balance and stuff, so let's go to this candle, because that's roughly when London started, even though this is not a time-based chart. This is what London looks like. You can also do this with volume profile fixed range. That's another indicator. And then you can drag it from the time of day when you want to see the volume profile. It's a very similar thing to TPOs, but for me, market profile TPO has a lot more detail in it and resolution. So on an intraday basis, I do look at market profile TPO. Okay. So yeah, volume profile has its use. Again, another lens into the micro structures that we have. Swervo Stacks says, would you say being more picky on the trade you take while trading a system is a good move? Well, if it's a system, you will always have presumably the setups that you should be in on, and then whatever you do outside of that system presumably is outside of the system. Like I don't know. If you're talking about more scalpy strategies that give you multiple areas, then yeah, I mean, having market profile to actually tell you where and what is going on. Are we leaving the initial balance? Are we failing the auction? Do we have a neutral day type? Is it a mad trending day? All of that would help to maybe not take the, weird counter trend that has appeared on the system. And they're like, yeah, this is a great thing. And you're seeing single prints left behind on the profile and they're going against that. It might work, but, it could be a single print fade. But how often does that happen? Not very often. Because, a big move outside of initial balance is actually cause to pause, unless you're already in on it. And just go, whoa, what happened? All right, let's have a look at more questions. What is the white, yellow, and blue line? White, yellow. No, those are just, again, another timing tool that I use as a replacement for like bookmap and microstructures and stuff. It's just three EMAs, 9 EMAs set to close, high, and low so that they never cross over. And it just tells me how strong the movement is, because if you have really strong movement, the whole movement will be happening outside of the ribbon. It means do not touch, or if you're already in, there's nothing else for you to do. Once it starts crossing over and crosses completely over to the other side, the trend is likely over. But again, I don't look at just that. I look at highs, I look at lows, lower highs, higher lows, and all of that basic stuff. So it's just microstructures, to visualize things better. Like, for example, I would call this a flimsy attempt at actually leaving the initial balance. So maybe a more range bound move and ending up in a neutral day type to the downside could be something to take. And in fact, if you look at microstructures, we are failing and moving back into the range. So maybe if we can get a bit of a pullback, maybe I can find a short on RBOB. GC is still inside its own initial balance. I don't want anything to do with that. DAX today, massive initial balance, which means a range. So I need to focus on highs and lows. Like, it literally went and accepted value from yesterday, which wasn't that massive to begin with, but all in the same 1 hour. So that was, and then it wicked back up from the value low. So yeah, for me, there's no trades in DAX today. Yet. Maybe later. All right, so now that RBOB is back inside the initial balance, tried to get out of it, failed, and now we want the microstructure to kind of show us some kind of a pullback. I mean, maybe up to VWAP, or from Globex is 0678. So if we can actually get a pullback somewhere. I'm not chasing this. So You always need, like, whenever you notice a difference, like a different, like, change in direction, you need to wait for pullbacks. Even if it's like a minor pullback, you still need some sort of a data point where you're going to get involved, rather than, right, it's moving, I must get in. That's always a bad way to trade. We need to trade from like that surrender mode where you're like calm and you're making rational decisions, and not like a, you know, like had bit too much substances last night or this morning, and then you're like, oh, bah. Like, I remember one time I had a coaching client, and he had too much coffee. I think before he even started the session, he had like 3 cups. He did like 5 trades in about 10 seconds, and I was like, shall we slow down? So, would you like a beta blocker or something? Speaking of caffeine, I need more because I'm trying to figure out a trade now. So yeah, so gold, very tricky for now. It's just slowed down completely. So let's just stick away from gold and stick with RBOB. Let's have a look at more questions. What are you setting for VWAP? It's just basic VWAP that they offer. I think my VWAP from the Globex overnight differs a little bit, but it's like within a few ticks, so it really doesn't matter. By the way, guys, couple of hypos on this RBOB. Even if I don't catch this from some sort of a higher area, somewhere closer to this wicked out initial balance, we may get another setup. So it doesn't matter, right? Another setup will appear, whether that's a neutral fade long from the other side. That could be a possibility. I do have the average session range for London at 0488. So I'm going to put that on the chart as a visual aid as well. And then if we get single prints below the initial balance, that will mean a strong downtrend has begun. And in that case, we're going to chase another pullback somewhere with that new development. So there's no, you know, I missed it. There's always another setup. So if you find yourself chasing, don't. Just breathe. Okay. London low. So we have VWAP on one side. That is the area where I would like to go short. Have a neutral day fade if we manage to fade the moves from here. If we go all the way down, I have a third hypo, which is continuation downwards with that reversal that crude oil is trying to do on the weekly chart. AJAZ, since RBOB doesn't have a micro, 96, why are you using 96 stops? I use about 75, yeah, 75. Sometimes through microstructures and 2-minute charts, I actually didn't feel the need to use more than 45, actually 35 yesterday. So yeah, try work a little bit harder to minimize the whatever you like. For example, if you're looking for a range-bound trade, take the highs and lows, wait until they're smashed, and then use a very low time frame to get in. You shouldn't really need more than about, well, let's say to be safe, 55, and that will give you plenty of time to react. But yeah, I know that the core formula is what it is, but remember the formula is 4 to 6 rather than just 4. And then that's the max default size. You can go smaller than that. You just can't go above it. Otherwise, the risk model will break down. So yeah, most people that I'm trading on RBOB, we are using no more than 85, like on a really big day. But generally try to keep it if you're taking it from like a 30-minute chart, yeah, you might need a pretty big stop. But again, use those lower time frame structures to position yourself a little bit better. If you ever see a conterminous line, maybe don't go in on a bearish engulfing, go in on the conterminous line. Drop down to a 5 minute, see if there's a range. Try to maybe match 2-minute Q high for a short. Because RBOB is pretty whippy, right? So it goes up and down like crazy. All right, so RBOB did fall. They're trying to do a little bit of a pullback now, but it's not enough. So let's see if we get a nice pullback. We want a nice pullback. Yeah, 0680 would be good. Like for example, right now I have a conterminous line at 0638. I have overnight VWAP higher up. So, and then I have another session high. So really, I'm not interested in going from a conterminous line. First of all, that's the middle of the range. And this is already, rotated through most of the initial balance. So really, my area to get involved would be ideally all the way back up to 07. So 207. And let's see how things look. Oh, look, 15-minute chart has another supplier there. So how big is this? Let's have a look. You can measure it easier on here. That's 44 ticks. So even if you use, 55, 60 ticks, that's plenty of stop loss. So yeah, just work a little bit harder. Unless you're like chasing a momentum trade or something, I don't see a reason to use more than 85 ticks. So 45, 50 when you can, and then no more than 85. So yeah. And yeah, gasoline futures technically do have micros, but I don't think anyone trades it. I mean, it's already a thin product. So yeah, and it's only $4.20 as well. So it's $4.20 per tick. So it's kind of like a micro anyway. All right, bit of a pullback. Let's see where they take it. And you're only 400 away from XF8. Nice one. That's a good job. Yeah. Let's see. More questions. Clerics. When would you know is a good time to start fading the day's move? Usually it depends on the products you're trading. In equities, never. It's never a good time to fade short. If you've fallen a lot, then maybe towards the last 90 minutes of electronic trading in equities. But on RBOB and GC and CL, after 9 a.m. Central, generally into the Euro close, that will be when I will be looking for my RBOB moves and GC as well. Now, GC can fade during New York lunchtime. So that's 11 a.m. CST, which is 5 p.m. over here. And then for crude oil, we have the last sort of 90 minutes of the session when typically you see another fade. Not every day, but on the vast majority of days. So those would be my times. Depends on what you're trading. It really depends. And then obviously you have the sessions sort of chasing each other. But I don't like to trade the initial balance. So even if London goes up and then something else goes down, if it happens during the initial balance, I won't be in on that. Because I just, I don't know whether it's the volatility or what, but I always get paid. Like even when I'm right on direction, I always get paper cuts during the initial balance. So over the years, I stopped. There's just no point because, I have like 13 years of data to show me that I suck during initial balance. So I just like sit it out, go do something else, walk the dogs, eat, cook, and then I come back. All right, so still no setup. Are we gonna get a trade today? Gold went into a bit of a dive, but still no extension of the initial balance. Come on. And for RBOB, if my market stalkers are going, oh, is it a SEEB setup? No, because it's too messy. Very messy. This is not a real demand to me. This looks short, if anything. So this is just like one big consolidation. There is no movement away from it. There is no good demand. Like, is this a demand? No. It's just like nothing. If you can hear snoring in the background, that's my King Charles Cavalier. Let's see what maybe GC does from the value high. I know that we are still inside the initial balance, but value high is a big area. So let's see, maybe I can do a trade there. I'm only going to use 3 micros because we are still inside the initial balance. And let's see if we can find a movement back up. Range trade. This would be considered a range trade. Again, lower probability because we didn't smash through the initial balance low. So really, my stop should account for that. But I think let's see what ATR says on 15 minutes, maybe. Yeah, but 35 ticks. Okay. Yeah, 35 ticks. Okay. So let's have a look at Cedric's question. What an amazing Asia session when I'm sleeping. Do we need to be an insomniac to Trump matter? Yeah, I mean, you know, I wouldn't be losing sleep over it. Asia will move sometimes. It has been moving a lot more frequently than normally. I'm not going to be trading Asia committedly, right? I'm still going to trade Asia when, sorry, again, frogs in my throat this morning, again. I'm going to be trading Asia when we have FOMC, and then if there's a rate change, that's when I trade Nikkei. Last one we didn't have that, so I didn't trade it. But anything else, it's like EVs. I don't care. I'm still going to trade the times of day when I've traded for the last 18 years, right? And that's usually DAX is the London session. RBOB and crude oil, generally later part of the NYMEX session, right? And have you traded Asia? Do you have backtest for Asia? Another thing that in the VIP group that I don't want to see is that you've not really traded Asia much. You don't have a combine that you've passed to prove that you can trade Asia for longer than 2 days. Also, don't want to see that either. If you've never traded Asia with any kind of particular success and you don't have a combine and an XFA to show for it, don't trade Asia, man. Like, you don't have data about it. I actually had someone who did that in my coaching, and they were like, oh, I traded Asia, I'm down $1,000. And I'm like, what possessed you to trade Asia? Why? Don't. No, RBOB is making a move as well, back up to my level of interest, almost. So let's see if we can maybe do this or the other. Depends. Suddenly I have 2 setups. Not yet. Not quite yet. I mean, neither of them were particularly great, I'll be honest, but yeah. What was Mick saying yesterday? Some pigs wearing lipstick. Yeah, these two setups are a bit like that. Couple of pigs wearing lipstick. So let's see if I can manage not to get too hurt on them. Let's wait for our RBOB to go back up. Come on, man. You can do it. So one issue here is that crude oil is still stuck in its own VWAP. So we'll see whether we can get any sort of indication that anyone wants to sell this somewhere. I would like to get it up to 07 on our RBOB, which is here. Come on, just a bit higher, just a bit higher. You can do it, you can do it. Do like ASMR to push our RBOB up to my supply area. Coerce it to go to my level. Okay, how long have I been trading? Since the start, if you take my first 5 years of the swing trader career, 18 years. 18 years? Hold on, let me see. Might be longer. I'm getting old, guys. That's all that you need to know. So, yeah, 18 years. Yeah. So a long time. In prop, 13 years. Just need a little bit more commitment here for this gold trade. All right, let's try this. MGC, long, 35 tick stop, line trade. Let's see what they do with it. And this would be my target, so not asking for too much. If it makes a move, just a little bit back up to VWAP. That's all I would like to see from here. So nothing major. It will be a small trade to start the day. And if I get smacked in the face, it's only 100. So yeah. Can you explain how to read volume delta from the DOM level 2 info? You can't really read volume delta that way. So you need something like a platform like Bookmap or Hoag's. I think Hoag uses T4 for that purpose. I'm not entirely sure. But yeah, you need something else. You can't, like volume and trying to aggregate all the stuff, and it's from time and sales anyway. So you have the DOM, which is limit orders. All of the stuff that you see here, they're limit orders, right? They're not actual volume. They're just limit orders waiting, right? They're like, come and get me. But then you have the time and sales, which is real-time orders coming through. And I prefer Bookmap for that purpose. If I'm going to look at volume, I want to see what's happening under the hood. But I'm quite nosy that way. Is it necessary? Probably not. But, you know, I want to know and see into what they're trying to do. Okay, let's shoot through all of these other things and then I'm going to go. Vital said, Dee, how contract expiration affects my decision based on my experience? It tends to bring some non-committed moves. So we don't have any contracts expiring yet. Maybe next week. But yeah, so expiration, like rollovers, tend to split the volume traded between the two contracts. So naturally it can lead to some indecisive moves. So you're like, oh, sustained auction. Wow, wow, wow. And it's like, it's not a sustained auction. I got it wrong. What happened? Oh, we're in rollover. So, always kind of keep an eye on that around about the time of rollover. And now in crude oil, it's every month. Okay, it's really annoying. But it is what it is. I've lived with that for a long time. And I don't even consider it, that troublesome until like sort of the last 3 days or so. Then it gets a little bit tricky and annoying. But you just, modify your strategies. So instead of looking for some big momentum trades, perhaps consider just taking, smaller trades. Don't be aggressive with targets. So instead of looking for, 70 to 100 ticks on crude oil, maybe consider 30 and 35, calling it a base hit and be done with it. All right, RBOB, slowly creeping up to my level. It's okay, I am Eastern European, so I can do that accent. Dee, which trading books are my favorite? I read trading books. Now they're my favorite because of the entertainment factor. Did they make me into a better trader? I don't think so. But 3 of my favorites are the standard ones, right? So Mark Douglas Trading in the Zone, purely because of how he spoke about losing all of his own cash, but still being in a situation that he could objectively start looking at the markets, and it taught him a whole bunch of stuff, which he then taught to us, right? And then you see Tom Hugard's book, so that one's pretty good. Big truths in there, but also more interesting from his perspective and some of his life. And then the final one is One Good Trade by Mike Bellafiore. So it kind of gives you the insight into the, day-to-day prop trading, which, at the time I found really interesting. We don't really have those sort of prop firms anymore. Like obviously S&P Capital is still around, but most people are, remote these days. So yeah. And do you trade stocks and options or just the futures? Yes, not too often. Like I have a long-term portfolio with some stocks in it, which I kind of plan to keep probably forever. But yeah, options, not as much. Sometimes if I see that the conditions are good for options trading rather than intraday, I will much rather do an options trade rather than watching paint dry intraday. All right, we're getting the movement on gold, and I do need to go. So thank you, Bruno, for reminding me. That's going to be it for today. So I'm going to, keep an eye on this. And if it doesn't make a move pretty quickly, I'm going to be taking it off. I am still stalking this short in RBOB. So if I have time before I need to go to the hospital, I may pop in a short there as well. But for now, I'm getting a bit of a movement on this gold that I was looking for. And now we just need to see whether it can pump somewhere back up to where it came from, which is the nature of the range-bound markets, right? All right, so today I have like I said, I have a meeting with all the other VIP coaches, and I'm going to figure out the time of day when we're going to have our first session. I was one of the later groups that they put together, so obviously some of the other groups have already had their first meetups last week, and also some of them are coaches that have done this before, so they know the drill. I have no idea, still getting familiar with everything. So yeah, I'll work all of that out, and I will try to set up maybe a VIP meetup like tomorrow, maybe after my my visit to the main broadcast with Paul H. So we will be on together tomorrow, and then we'll see what happens. All right, guys, that's it. I'm going to bounce because I need to go get some scans. Thank you for hanging with me. This has been the London session on TopstepTV. I'm Deeyana Angelo, and I will see you again tomorrow. Take care.